Hi, I'm Philip Teo, your host for Trading World Summit, and I'm excited to introduce to you NS Fidai, our presenter for this session. NS is the founder of Analyze India and also the director of Peter Share Broking Private Limited. With more than 30 years of market experience, NS has spent the last 15 years as a practicing technical analyst, trainer, and mentor to more than 1,000 students. Having pioneered the convergence of moving averages, a different approach to using multiple moving average, NS is now one of the most respected names in the Indian trading and investing community with over 31,000 followers on Twitter. Now, with this short introduction, it's again my honor to welcome our summit speaker for this session, NS Fidai. Hey, NS, welcome to Trading World Summit.
Hi, Philip. How are you? It's nice to have me again. I'm so honored. Thank you, and it's a pleasure to have you also on again on this. It's been a long time since we last met, so maybe this is a good opportunity to connect with the audience and the Trader Wave Summit. Inshallah.
Definitely. It's really a privilege to have you on board this summit to share with us how you formulate your exit plans to actually minimize losses and maximize returns. Now, for the benefit of those summit participants who might be just knowing you for the very first time in this summit, can you briefly walk us through on your personal trading journey? Can you share with us what were some of those defining moments of your trading career that you think would be of interest to the summit participants?
Well, I got into stock equity markets, you can say, as more of a serendipitously. It was I had joined the bank, and there were lots of my peers who were trading in equities, and they were investing in initial public offerings and all that IPOs. So I also got hooked onto it, and that was in 1990. And then for next 15 years, there was no looking back. I was working, and I was also making investments and a little bit of trading, but not serious trading, because at that time there was no computers as such or anything, right? It was more of a call and trade kind of system. But then I left the bank in 2003, and I returned. I went to UAE, that is Gulf, Dubai. And from there, I returned back in 2004, and I promised myself that I'm not going to work for anybody. So that's how, my journey into technical started, because one of my friends gave me a CD. Now, this is a very well-known episode which I've been speaking across media. But because of the new audience here, I think they would love to listen to this. He gave me a CD of Metastock, and he said, just put this in the system, and maybe you'll start making money, right? And I'll be there to help you out. And that's how my journey started. And in the initial stages, I lost 90% of my capital in just initial when I started, right? So within 6 months, I was down 90%. I had very nominal capital, but I was learning from my mistakes, actually. I was learning what not to do. And that actually helped me, come back, recover all the losses, because I learned what not to use rather than to use everything. So there was this, there were some lines on my chart, and I was very new to all this charting and all that techniques. And I was seeing those like snakes, lines were there, but I couldn't understand what to do with them. And I was not fiddling around, because I was new to software, and there was no support kind of system. That guy had become very busy. So there were some 5 lines on the chart. And that's how, when I started observing them, and I tried to learn about them, they turned out to be moving averages, right? And from there, the numbers are 4, 9, 18, 50, 200. Those are my numbers I have been using since, I got it as a gift, you can say, because it was there and I did not know, and I just started using it. And from there, we learned about convergence of moving averages, which is how, people know me as a pioneer of convergence of moving averages, right? So that's how I got into, I recovered most of my losses. 2 things that happened was, one was moving averages. Another was, the best advantage was markets went up. If you know 2004 was a big crash in Indian market. Across, I think it was globally also big crash, right? And then markets kept on going up, like we saw in 2020 and 21, how the markets kept going up. Same way in 2004, that similar scenario happened. Markets fell it was a record fall. Single day Sensex fell 16% on a single day, 17 May. And since then, what I was doing was, why I was losing money was I was shorting the market, because more it goes up, you like to short, right? And that's what I did. And then I realized, no, this is not going to happen. This is going to take away all my money, because it was taking away all my money. Plus, I was doing leverage trades. So I had to cut down leverage trades. I had to cut down my, means short trades. I went into long trades, used convergences, and, the journey has since been like you can say, I have been flying around.
Wonderful, wonderful. I'm sure you are now all ready to share your presentation with the summit participants.
Right,
and now
right.
To the summit participants watching this video right now, I'm sure you are just as eager as me to seek NS insights. So without further ado, let's sit back and learn from NS.
Hello guys, this is NS Fidai here, and we are having this new presentation. As Philip has already mentioned to you, that we are going to learn about, how to exit. Mostly what happens, most of the people find exits are difficult to make. I have talked to hundreds and thousands of people across segments, and what we see is basically people love to buy, they don't like to sell. Okay, it's very important that you know when to sell. If you know when to sell, you will save lots of money. Maybe you will be able to stay in the trend, and you will not suffer lots of pain, right? Because when markets goes into sideways, when market goes into downward trend and all that, when breaks down, you can have means you can see profits diminishing, and then you go into losses. So we don't want to have that, right? As a trader, as an investor, we don't want to do that. Now, today in my presentation, I'll try to make two options for you guys. Basically, one would be for investors, basically. And as I have said in preview also before we spoke with Philip, that today I am going to introduce you to a new tool. Maybe lots of people don't know about it. It's called standard error channel. So before we get into that, I'll also explain to you how to use it, how to see on the MetaStock software and all that. And after that, we'll go to the next segment where we'll learn about how we can protect our trades also, right? The short-term trades or intraday trades where you get false breakouts and all. So I think let's begin, right, guys? So very important that you know that if you plan, there is no chance of fail, right? You are ready. But if you fail to plan, you are guaranteeing yourself to fail, right? So we need to worry about planning properly. So when you take a trade, make sure that you're always have an exit plan ready. So what is this? Why do you need to do that? Basically, we talk about risk reward every time. Most of the time we talk about risk reward ratios and risk reward and all that. We hear about it, we read about it, but do we actually plan for it, right? See, probably you don't know what is the reward, but at least you should know what is the risk. If you are new to the market, determine what is your risk, how much you can take a loss, right? Some people may have different plans, so we'll see that also. So what we usually do as a technical analyst is we try to wait for a breakdown. Whenever a breakdown happens, we exit a trade. So breakdown of what? Breakdown of multiple things. What are those multiple things? We use trend lines, we use moving averages, we use percentage fall, like, you can say I will take only 8% fall, or I will take 10% fall. If somebody is holding it for a very, very long term and he's okay with, means maybe he'll take 10-20% fall depending on the risk appetite of the person. Then there are other multiple ways, right? You can use moving averages crossover, like you can use two moving averages, one a faster moving average, which will be shorter time frame, and the other one would be a larger time frame moving averages. When shorter time frame crosses below, that's when you exit, right? Then you can shift to the time frames also. From daily, you can shift to weekly and monthly, depending on what sort of your investments you're holding, right? If you're holding a very long-term investment, then you should be looking at weekly or monthly for crossovers. So that's how we do, right? And these are mostly known tools. So most of us know this. Then there are patterns, like various patterns. People wait for the breakout or a breakdown of a pattern. So we are talking about breakdowns, right? So we talk about head and shoulders, then there are channels, then there is triangles. Then there are oscillators and indicators. People use lots of oscillators and indicators, which are like RSI, MACD, stochastic, and multiple ADX and so many things, right? And there will be hundreds and hundreds of oscillators. Some people can create their own oscillators. Softwares allow that to do. Then you have average true range. Average true range is basically nothing but, when you are saying what is the range for the stock for last few days, and based on that, if it breaks the range, then you are exiting the trade. So that's also one of the ways people exit. Then you use very simple kind of a tool which is called lower top lower bottom, given by Charles Dow, right? Charles Dow is supposed to be father of technical analysis, and he gave this beautiful tool which works perpetually across the markets and across the, you can say, segments and whatever. You can use currencies, commodities, you can use whatever now, crypto coins and all that, and this will work beautifully. So Dow's lower top lower bottom theory also works very beautifully, and some people use the combination of all this, right? So now, before we see few, we get into the, what do you call, the new tool, I want to show you a few examples right here. Like if you see, this is how the moving averages give you a beautiful kind of support. If you see this, the stock has moved up substantially from almost you can say 200, 300 rupees at the bottom to maybe 1700, and still holding the moving average. It is not ready to break down. But some people may have exited the stock when it gave the breakdown on intraday basis. So if you see this is a 50 DEMA, 50 days exponential moving average, and the stock has been consistently taking, has not challenged or broken down the moving average except once. Right now it is resting on that. So maybe this is one way people must have been using it, right? Now, second chart of the same group company, but a different stock, right? And it has broken down, and see how after the first breakdown, it gave a small bounce and then again fell. So now that's the end of the stock at the moment right now. If somebody was holding it since 300 rupees or odd, they would have exited around 1200 odd, right? So this is another example for you. Then we use moving averages and trend line. I just wanted to show you what happens. The moving average may give you a breakdown. On the left side, there is a breakdown on the chart. If you see extreme right, I marked with the arrow. The stock has given a breakdown below the moving average. But if I put the trend line, then the stock is still above the trend line. So what I usually means, I have devised a quote for this is, I say moving averages are flexible trend lines, and trend lines are rigid moving averages. So you use either of them or combination of them, and they work beautifully. So that's what I wanted to show you, what people do, what you could do if you have not known about it, by looking at this present current charts, right? So if you see, there is a breakdown, but still the stock is in an uptrend. So the moving average sometimes can remove you from the system early, and maybe then the stock reverses back and it goes up, and you are left looking at the stock, right? So when you use the combination, it could save you, and it could help you stay in the trend for a very longer time. Okay, then we have, now look at this trend line, simply trend line, right? Nothing else here, no moving average, but pure trend line. And look how beautifully it gives support to the stock. And finally, the stock gave a breakdown, and you would see how it gave, it took support before it gave a breakdown. Just the last arrow, up arrow, and then the down arrow, you see that that's where it gave a breakdown, and that's a breakdown of the whole trend, right? So this could also protect you. Pure, using simply the trend lines also can help you take a trade. Now, one more trade where the moving average and trend line both have given a breakdown. So what will protect us sometimes? So I am trying to give you some combinations, people use multiple combinations. So this is one of them. And here I have come across a very smart investor. When I spoke to him, he said, usually I don't sell a stock till it doesn't break 25% of the peak price that it has generated, because 25% below would be where I would be after the peak price. I would say the stock is changing the trend. Rather, it doesn't change the trend before it breaks the 25%. Now look at this. The trend line has been broken. The moving average, stock is closing below moving average. Now trading below moving average. But if you look at 25%, there is a horizontal line where I have mentioned. The peak was 92 rupees for this stock, and the 69 rupees, which is just below here on the dot. If you see dotted line, that is the line. If the price goes below, the trend would change, right? So these are the three different ways of looking at and protecting your stock and staying in the long term uptrend of a stock, right? You don't get thrown out of it, because as an investor, you would like to stay with the stock and make it a multi-bagger for yourself, right? Now let's add standard error channels to your arsenal, right? So what is standard error channel? Basically, price movements usually swings from one extreme to other. We all know, right? Bull markets are extremely overbought, and they can be overbought for a very long time. Likewise, that is technical terms, right? In fundamental parlance, you can say the valuations go beyond the sky, right? They become euphoric. And the same way, when the markets fall or the stocks fall, they go to extreme ends, right? And where your oversold becomes highly oversold, and still it can go still further oversold, right? And the stock can keep on falling. And like it said that the stock markets test your patience till you don't become, you can say, the bankrupt, right? So that's what happens in most of the markets, and most of the people fail to understand like how the extreme ends can be utilized. So this standard error channel actually works in that, means it takes you through the journey till the trend is in uptrend. It will hold you in the uptrend, but moment that uptrend is now fizzles out, it will tell you that the price has gone below, you can exit, right? So that's how it works. So if you read this, it says price movements usually swing from one extreme to the other. When markets are overly optimistic, prices are driven up to an unsustainable level. Likewise, when markets are overly pessimistic, prices are beaten down to an unsustainable level. Now, the important words, if you see here, are extreme and unsustainable, right? The markets go to extremes and the prices are unsustainable. They cannot stay at that point forever, right? So they cannot go beyond that point also. So markets tend to have an equilibrium point also, but basically we need to understand first, it will make a top maybe, or a bottom which will be extreme, and then try to jump up and then come back to equilibrium, right? So that's what the markets do. So markets tend to have an equilibrium point, a point towards which prices tend to retrace. So standard error analysis is helpful in determining where the extremes lies, right? And let's see some charts. And this won't work every time, but whenever it works like a charm. It is beautiful, right? So where do we use this? Before we even try to use this, where do you use this? You use it on a whatever the time frame you're looking at. If you are looking at something that has gone up from one extreme to another extreme, that is the area you should be watching out for. And you try to draw this standard error channel from bottom to the top, and you will see that you will get extremes in place. Now if you are in a trend, then let it continue. Just you say extend towards the right. The whole the three lines will extend towards the right. There will be an equilibrium line. There will be two extreme lines, right? So they will start extending towards as and when the price rises. So what we will see is like three lines will move towards in the future, like as much as you put the charts, and they will keep on following the prices. Let's see how this works, right? So if you look at this is a Nifty chart, Indian stock market, right, index, which we usually track. And look at this, how beautifully the prices have taken support since April 20 and up to currently like July. And right now also, if you see, markets were exactly when I had plotted this, it was at 15,632. Today it closed at almost 15,850. On the higher side, it went up to almost like 15,890, 900 approximately, which is almost like lifetime high areas, right? And beyond 16,000, we'll have a fresh breakout. So you are at the extreme end of the channel right now. And from here, if you want to if you look at the setup and if you want to take a trade, then you can take the trade based on this lows, right? 15,570 or just a little margin below that. And you can say, I will go long with this, which actually the stock has actually moved up since I made the presentation. This was made 2 days ago, right? And today is, I think, the 23rd. So this was made on 21st. So what I'm trying to show you is the price has jumped up from this extreme area. Right. So till the price keeps on dumping up, till it stays, you don't have to do anything. You just have to stay, invested. Right. Okay, great. Then the second one, now look at this. This is another stock, Eicher Motors, where if you look at this, the price gave up, fantastic resistance. It took so many multiple resistance to see on the trend line, on the top trend line, right? That is the extreme bullish trend line, and only once did it go below. So we'll learn how to protect ourselves here also. Sometimes you may not be able to protect, but once it comes back, maybe it will give you an option to means get into, and I'll show you how you can use it in a shorter duration also, right? So you will be able to protect yourself in that case. Okay, so this is the second stock where if you see multiple tops have been caught on the resistance line of this standard error channel. It's beautiful, like you would see that if you are means a day trader, or you are a long term means you are a positional trader, you can take the advantage. You can even sell options, or you can buy put options, right? So you can sell call options or buy put options based on when the price comes to the extreme top end, or you can buy call options at the bottom end and means or sell the put options, right? So you can take fantastic money. Those could be positional trades, and when you do option trades, you know that you will make fantastic money because you are on leverage, right? You tend to put a and when you are you have got the right direction, buying will give you fantastic money, right? Option buying will give you crazy kind of money. Right. So now look at this again, another stock, Adani Ports. This is actually trading here, at a low risk area. If you look at this, and like I have marked this, as you can see, it's a low risk buy setup. You can buy here and maybe keep a stop loss just below the horizontal low of the previous low. So you can use the combination of Dow theory, and you can go long also. And you can see it's at extreme end. The stock was at 900 approximately, and then it has fallen almost to 650-ish, right? So from there, there was a bounce again. It went up to equilibrium point. From there, it fell again. And look at when it was trading in that zones, it was testing the equilibrium points. Now, if you look at, observe this, multiple times, how the price comes to this, here, look at this fantastic, retest of equilibrium. Look at how a little extreme moves, but could not sustain and then fall, right? So this is the beauty of the system. It works beautifully. Look at this few more charts. I've got few more examples for you. I'm sorry, we'll have to see the past one. Yeah, okay. Now here also, if you see, it had gone beyond, but that's only once. But look at the bottoms. Beautiful, beautiful connections. Look at the, the equilibrium line. The price tends to come there, and now right now also this stock, Bajaj Auto, is almost in the zone of low risk area. So if you wish to get into this, maybe 38.50 could be the zone where you can start looking at going long in the stock, right? Now see, you can use multiple standard error channels. I'll show you how also we apply that, right? And look at this, you can use it in this fashion. Here also you could have used it. I could have showed you here. So you could see that if you apply, it would have given you a buy signal once it came back into the standard error channel, right? And look at this. Right now there are multiple supports here. The the equilibrium line also is giving a support at 12,230, and the red line, that is the intermediate. I have put a small standard error channel for a small trend, right? And it is showing us at target support at 12,210. So if you combine both, you can take a trade here, right? If it breaks, then it could break and come down all the way to these areas, and you can make money on that side also. But important thing is here, risk is very low when you do that, right? So very important to know when to exit. So here you see the standard error channels, you can exit at the extreme ends, and you can re-enter at the equilibrium, or at the support line or extreme bottom bearish line, right? There you can enter. Okay. Look at this, how beautifully, like if you know this, how to use this. Now what happened here is this stock has tended to go beyond, and I have created a parallel line using the extreme bullish line, and created a parallel line. If you can see here, the dotted line here, and I have put it here, and look at this, exactly at that same area, and it has taken a resistance. Now at bottom also, if you see, here also I put another line. So you can do that, and maybe what happens is, see, every stock may not behave exactly as we wish to, but sometimes if they overdo things, you can put the trend lines and you can capture those moves also, right? You can capture the bottoms also. So this bottom has to be in place. So first bottom you'll never be able to capture, but in future, whenever it maybe if it comes and if it doesn't break below, maybe it will retest this and then again jump. So that's what we can do, right? Again, here I have given you one example where I have put a standard error channel within the major channel, right? And look at this, the price actually came to equilibrium line and the lower support line of the intermediate standard error channel, right? And how the price jumped from there. Now you know where is the target for the stock. So you can short here in this range and you can short here. There are two areas where you can go short, right? If you take a short here and if it doesn't respect it, you can cut at nominal losses and re-enter your short positions at higher level, almost 100 points, 150 points above the the first short level, right? So this is what you can use. This is how we can use various tricks and trades of standard error channels. Divi's Lab, look at this now. This is giving a fantastic. I'm sorry. Yeah. So Divi's Lab is giving a fantastic opportunity. The price is almost in the zone, right? If you see this, it's just at 4,787. That is 4,800. Made a high of 4,848. Possibilities it can go to 4,900 odd rupees. When it does that, you can start taking your short positions. You can build your short positions, right? And you can even connect one more, what do you call the standard error channel from here. And when you do that, probably you will get a best kind of setup. So let's see that. Okay, I'll try to show you in Divi's Lab how we can set that up, right? So this is the setup we are talking about, and this is where you can see there are various channels, and this is a rotating toolbar. This is a beautiful system of meta stock, right? And this is where the standard error channel is. There is RAF regression channel, there is standard error, there is standard deviation, and then there is equidistant channel. So we are using standard error channel, right? We apply it to the bottom and take it forward and look at this. Now you can even extend it, right? So now you know as the time goes up, these are all dynamic levels. So as the days pass, now this is as of this, I have not updated the data. So last was 20th July, right? And today we are on 23rd. We had a holiday in between, basically. So that was the Eid holiday, right? So we had the 2 days of trading after that. So you could see that the stock has, now double resistance. One at the very near to this exactly 4,850. Another is at what we see on the chart here is 4,900. So between 4,850 and 4,900, you can create your short positions, right? And you can wait for the stock to start acting up. Moment it starts correcting, you can build on your positions also, right? So that is how you can take more opportunity. And if you're a short term means a swing trader kind of thing, then this short term trend will give you a target of 4,700 first and then 4,550, right? Or just above that, 4542, right? So that is your target. And as the time passes, it will be it will come down further. And this is your line here, which is almost like 4480 approximately, right? So that is where the major support would be. That is the equilibrium line. Okay, we saw Asian. Now there is Britannia, right? Now look at this Britannia Industries. Britannia Industries is usually goes to the top and comes back to the equidistance, goes to the bottom and then reverses back to. So here right now it is trading exactly in this equidistance area. So what you can do is you can wait for the breakdown or a breakout. So what you can do is you can buy straddles also here, right? So you can create your strategies based on that, and you can make money. But what I am trying to emphasize here is not only that you can get an exit, but you also can trade those setups also over a period of time. So what happens, suppose you had a loss because you entered a stock and you lost a little money, maybe it will provide you an opportunity when this standard error channel will be put in place, and it will give you lots of opportunities over a period of time. When the stock is trading, means maybe in a downward channel, or it's in a consolidation mode and all that. So if you see this is in July to July, almost a year, and it has been consolidating, and it has given you enough opportunities to trade this setup, right? Titan company, look at this. If you had been short on this, there was a head and shoulder pattern which fell and which was at equilibrium. Then there was a breakdown. Now we are expecting the price. If it comes to 1600, 1560, that would be the area where you can go long, right? If you do that, because we are using this another parallel line of previous bottom to, maybe if it does extreme downtrend, you can get that, right? So this stock has this tendency to go beyond also. But one beautiful thing is it always comes to equidistance lines and then bounces or falls from there most of the time, if you see. So that is the, I'm trying to show you as many setups as possible in different ways, right? Now look at this. This is your Ultratech cement. The stock is already on the up move, and the upside is like last when we saw on 20th of July, the price was 7424. The high was 7544, right? And the top peak price, what we see here is 7,830, 8,000, which is not very far away. So when it comes, probably this, it will achieve this target. And when it achieves this target, you can go short also at this zone, right? And you can take a short trade also. Here also, we have tried to use parallel line. Okay, so I'll show you how to set up a parallel line. Okay, let's go to Ultratech. Okay, now we are putting the bottom and the top, right? So this is what we have. Okay, now you can just right click on this and say create parallel line, right? So once you have parallel line in place, you just extend it, take as many touch points as possible. See this, so many touch points here. Okay, so I have taken as many. You can change colors as you wish, just to show you. You can play with the shapes, style also, right? And if you keep it thin only, then it will be visible. If you keep it thick with weight, it will not be visible. This the dashes will not be visible. See, I have done it thick weight. It will become like normal, right? So you use a lightweight to show. And you could see like this is the zone where we are watching for the next target. Once the price comes into this zone, you can start going short on that stock, right? So I hope people are getting this whole drift of how to use it. And we'll see a few more charts here. Look at this, one more setup, beautiful Tata Motors stock. Okay, multiple supports on horizontal, and I have used a very short term, in horizontal way. If you look at this, and there are multiple supports. One is the larger standard error channel, lower support area is around exactly around 300, a little below, tad below that. And your horizontal line also gives you in that same zone. So your risk is nominal. Let's try to put this, right? Tata Motors. So we use this top, major top, right? And from here, you use like this. Now look at this. You have, what is the level? It is 295. And you can put a standard error channel from the bottom. At the bottom. So this, exactly in that zone. So 294. So just 1 point here and there. And you can say you can, when it comes to 294, 295 area, you can take your long calls here, right? And then you can wait for the price to bounce to maybe 330, and that would be a fantastic risk reward ratio. The risk could be maybe 4-6 rupees here on the downside, and on the upside the target could be something like 329, 330. So that is fantastic. Like you are risking 6 rupees and you're getting 35 rupees. So that is 1:6 kind of risk reward ratio. So you can do that, right? And then we have Wipro here. Wipro has a tendency to go beyond on either side, right, on the bottom and the top. So I have connected a parallel line here as I've shown you, and right now it is taking a resistance, but it is in very bullish kind of momentum, this stock. So probably we should look out for 610 area where we would like to go short on this stock, right? So that would be a great opportunity to take a very low risk setups, and you can even as a trader you can take a bet here, or as an investor you can stay long, don't do anything as a long-term investor. But if you want to hold your bets and take some money from the option side, this would be a good opportunity, right? So whenever price comes to a particular pain area, like the extreme end area, you create some rental income through going long on the puts, and when it comes to the bottom, you go to the and buy calls. So you get some rental income from the stock, right? So you can make very good money. You can sell otherwise also and make money, because if you have the stock, so you can put it as a margin and do that, right? So that is now this is something beautiful. Look at this. This is weekly chart of grassing, and how it beautifully has captured the whole trend. Now, very important, if you would not have exited, what would have happened? That is more important. And if you don't enter, what happens? Look at this. So this is the beauty of this, standard error channel. They keep you in the trend till it is in the trend. Moment it goes out of the trend, you need to exit. Look at this. It's going down, and then like the stock kept on going down. If you not have exited, and this is something that has happened in like your weekly chart. This is not daily chart, right? So this is a long term, actually, since 15 kind of thing, 2015 to 2021, almost 6 years. And look at this. So you can actually, these are cyclical stocks. So when you are looking at a cyclical stock, this is cement, this is a fiber based company, right? So this is into fiber, rayon fibers and all, and it is seeing a cyclical move. So that's what is happening here, and you are able to trade the trends as and when they happen. Okay, so this is the beauty of it, and you can even buy the bottoms of the trend, so you can make more exponential money. Look at this, how at the top it is not allowing the price to go up right now in the equilibrium. Plus, if you are technically savvy, then I will show you that on monthly chart, grassing is making something beautiful. Weekly chart, it is making a fantastic, beautiful pattern. People who recognize this is called rising wedge. Now, rising wedge is usually a danger kind of pattern, right? All of us know rising wedges are not a great sign, and they are distribution signs, right? And look at this. So this is what it is doing, or you can take it from here if you wish. And look at this. This is how it will go. Probably what I am looking at is the price going up to this, beyond a false move, and then a breakdown, right? And what we usually would do is, in normal cases, is we would wait for the price to go below this and then take a trade. Now here, if you see a false move, what happens? That is what we are going to learn in next segment, right? Now, this is Coal India. This stock is pure cyclical commodity stock. It is the stock commodity which is out of favor, right? The coal. And look at it. This is monthly chart. How the price has not been able to cross the tops or the bottoms of this channel. Now, if you would want to create this channel, it would be there could be some parallel issues. If you try to create, they will not come out properly. But in this case, when you use standard error channel, what I have done is I have taken this top date, and from there I have extended it up to the current day, right, or this month, and that's how the whole channel is in place. Now you get enough opportunities whenever the stock is in the support areas or whenever it is in the resistance areas. You can go short and go long depending on what you see over there, right? So I would say people who are very technically savvy, they would find this to be one of the best tools they can use along with the normal tools that they're using right now, right? So this is about standard error channel. Now let's shift to the next topic, fake moves, right? And they cost real money. I hope all of us have paid our fees to the market for fake moves. And what we are going to see here is how the fake moves are actually painful, right? So what we want to do is we want to reduce our losses as much as possible. I will teach you something that is very simple, very easy, and you will say, okay, it was there. Why I did not know it? But that's how the experience comes into play. Like you observe a stock for a long time, then you observe so many charts over a period of time, and then you realize that it is there in front of you, right? So this is one tool, not tool actually, there's a system strategy, you can say, which you can use against all your whatever you use for buying and selling of your breakouts, right? Usually we all buy breakouts of horizontal trend lines, or we buy breakouts of inverted head and shoulder, cup and handles, or means maybe some triangle breakout or whatever. So if you are looking at even the moving average breakout or moving average breakdown, so you are looking at those kind of fake moves wherever it happens. So what to do, how to protect yourself when you see that kind of move? Usually when we see a breakdown or a breakout, what we want to do is we want to remember the candle that gave the breakdown, right? So I'm giving you the pointers first. So what you need to look out for is a candle that gives a breakout or a breakdown of a pattern, trend line, MA or whatever, right? So whatever tools you're using, if a particular candle that gives a breakout or a breakdown in whatever the time frame you are looking at, I would say you can even look at intraday time frame, right? So it depends on what you're looking. So if you're looking at that, just note down the high and the low price of that candle. Okay, that is the most important thing. In case of a breakout, now see, very important, in case of breakout, when I'm saying it is bullish, right? So in case of a breakout, the candle low is the important point you should note down. Okay, in case of a breakdown, the candle high are your stop losses. So if you remember these two things, now let's see how it plays out, right? And the beauty is when it plays out, it gives you fantastic money. Look at this. 970, fantastic multiple supports, so many supports here, this horizontal line, so many supports, and see what happens. 958, a false move. This is a daily chart, makes a false move, no follow-up. When you see this kind of thing, now next day itself, your stop loss got hit. What was the stop loss? You have to remember is the high, when it is a breakdown, the high of the candle. So this day's high would be your stop loss, right? So it was the stock hit the stop loss next day. You have to go long actually once you see this. Okay, and see what happened. The stock actually went beyond, it made fantastic moves, right? If you want to see right now also, I'll show you current prices of Havels. Okay, look at this now. Havels is at 1103. And this was a candle. Look at this. You're talking about 984.95. So it gave a breakdown. We need to see a follow-up, no follow-up. The price started moving up. It consolidated actually. It gave you enough opportunity to get into the stock and see this. And then it went almost to this previous high area and even went beyond. So this is the beauty of getting into the right kind of systems. So if you know what you're seeing, you can make money. One more setup for you. Look at this 2563, 2540. Small breakdown and see what happened after that. This is Alchem Labs, right? We'll see the tops here. Andhra paper. Now look at this. Sorry. Yeah. Okay, now look at this 277.95 to 83.70 something, right? And this was a false move. The candle that gave a breakout. After that, you want to see what happened to Andhra papers? Let's see. So this. Since then, it had come down to 243. 40 rupees down from that area. Now look at the candle that was this was the candle 260, beyond 260, 248. Yeah, and maybe today also 254, and it could go even further down. Now this is 260. Yeah. So this is what you are checking out for. Okay, and let's see. This is Anup Engineering, right? Actually, let's go and check what happened to Anup. And what was the period, right? So period was this one was September, November, right? So this is where I think, yeah, this is where it gave a breakout. Yeah, this is the point, and from there it fell to this area, previous bottoms. So you could easily make some money out of that, and you can maybe if you are caught on the wrong foot, you exit here itself. The candle that gave a breakout, sorry, the blow of that, when it is breached, you get out and you can re-enter, right? Whenever it happens. Again, maybe here, if you put this trend line and if you check if there was a breakdown, you could enter this area, but there was no breakdown there at this point. So there was no false move here, but there was a false move on this side. So you could protect yourself. As a trader, what happens? You get stuck and then you are out of the trade and it goes down very sharply. Instead, you could exit here itself on this day. Okay. On 10th of July, right? And sorry, 7th of October. And you could take your position means or exit it. That's it, right? So this is one setup. Another one, Deepak Nitrite held here multiple times. Look at this, there was small false move, 1988 and 1999, right? Let's go and check Deepak Nitrite. Let me turn the chart into same template so it becomes easy for you to. Okay. Now where were we? Deepak Nitrite. Yeah, here, see this. This is where we saw, this is where it gave a breakdown, and this is where the stock started trading below, right? So you could easily, means because we buy on a breakout, most of the time we get trapped. Here, the stock you could have exited at 1945, it went below, and you could even take a short trade when it gives a breakdown also. So that would work beautifully. Now here also, I think there was a trade here. Just wanted to show you 1712 is the low, and if you check this. 1710, 1715. So 1710 was the low here. This candle, the high is 1768. Moment the price crossed 1768, your stop loss got hit. You take a long position once that happens. And look at this, it went to 2000 rupees. So you can do this multiple times either side, right? DLF Limited. Look at this. Let's go to DLF chart. Okay, now look at this, 330 to 70, 338.80, and look at this. The stop loss has been hit. You can go short in this counter, and you can check out whether it plays out. If you are taking a short, then this high should be a stop loss. Okay, if you are taking if you had taken a long position, the stop loss got hit here, based on this system, right? Likewise, Godrej Properties, look at this, same almost multiple tops, 1572, 1588. Let's look at what happened to Godrej Properties. Yeah, it also gave a breakdown next day. Okay, so this is where we see, and then there was a breakdown, right? So you could take a short trade here. And your stop loss is very nearby. So what happens as a trader, you are protected with very small stop losses. You don't have to worry about taking the breakdown of the whole setup, the lower top, lower bottom, or whatever, you see. Sometimes what happens, those are very deep. So we don't get trapped in that, right? We have Tata Motors here, see this, 357, 358, 90, and then there was one more attempt, but this was also lower. I'll show you Tata Motors itself. I think here it is. Yeah, so we had this, right? Tata Motors. Then we had this double top. If you see this, the value here was 357. The value here was 360.75, and this value is lower. This is 358, so it is below 360. So your stop loss did not get hit. Okay, and look at the breakdown, right? So fantastic kind of moves you can capture with this trade setup. Reliance Industries, we have bottoms here in place. Let's see what is happening. Okay, let's go to Reliance. Because everybody wants to trade Reliance, right? Most of us in India would love to trade Reliance and would like to see what happened. So when was that Reliance? Okay, that was earlier on. 1835. This was in November and February. Okay, this was here. November, and then you had a bottom in February. That never got a follow-up and it went up. So your stop loss got hit, you went long and you could make money. So if your stop loss gets hit because of the false breakout, this is where you exit on the high of this candle 1913 and just look at it. If you reverse the trade, what kind of opportunity? So every time when there is a breakdown, false breakdown, you see you are hitting big time money and you could lose big money. Many people I know who would exit after this. Here, the exit is somewhere here at 1913 instead of 2120. So that is almost like 200 points below, right? HIL Limited, this is right now a good stock to watch out for. Yeah, here the bottoms are in place. Look at this. This is the low 4350, and this is the bottom that drove. There was a follow up. Then this high was crossed. Moment this high is crossed, you exit your short trade, go into long trade. So what was the trade here? There are two trades here in sheet cement. So here you see it's in front of you, which actually happened, and here this one, this two. So you can use in multiple areas also, in extreme short-term time zones also. You can use it over a period of time zones also, right? So very important, guys. Now this is something that we need to worry about and remember. When you trade, remember that trade has to be done when there is a setup in place. The setup will be visible. Don't make one where there is none. So this is what happens most of the time. Traders try to preempt a trade. Don't preempt a trade. I would say think of yourself as a hunter who goes for a shoot in a jungle. So you don't shoot animal which you want to shoot, which is beyond your rifle's range. You wait for the animal to come to your range first. Your rifle has a range of 50 meters, so you don't shoot before that. If you shoot before that, it will scare it away, and it will scare all your hunt away, and you will not be able to take a trade, right? Same way, you will not be able to make a hunt, you will be unsuccessful. Same way in markets also, wait for the stock to come to your setup, let it be visible. It will be easily visible. You don't have to actually do anything extraordinary. Just look at the chart, it will be in front of you. You need to know the exact low or a high of the candle, and based on that you take a trade. Now you can combine this setup along with what we have learned, about standard error channel or in any other setups. Let's say wherever you are looking out for a breakout or a breakdown, logically that's what traders prefer to do. That I prefer to buy near to the supports. So if there is a breakdown, then I don't take a long trade. But if there is a false breakdown, then there is a fantastic opportunity to make money, because that's where the smart money has trapped the dumb money. And that's where the stock will run up very fast. And that is what actually gives you great kind of returns on your trade. So you get fantastic risk reward ratios when you are looking for contra trades, right? So if there's a breakdown, wait for the follow-up. If there's no follow-up, that means there will be a reversal. And when there is a reversal, you know where is the stop loss, when to take a trade, when to go long, which I've just shown you. So I will tell you what beauty about this system is. It is system agnostic, time frame agnostic. You can use it on intra, end of day, weekly, right? System works on index, commodities, stocks, currencies. Success ratio is more than 60%. What else you want, right? Nothing beyond that, right? So whenever you see it and if it's visible, then the success ratio is 60%. Now, why do we need to do this? Because see, when you take a trade, when you are into a system, when you want to get into buying or selling as a trader, as an investor, you want to first define your stop losses. Very important. Like you just don't enter a stock and then say, okay, where is my stop loss, right? Don't do that. Like you don't enter a train and say, okay, this is going to go to my home, or it is going away from my home. Same way here also you need to worry about similar things, right? It protects erosion of capital. Traders will find it very, very useful, right? Most of the traders will find it very useful, but even investors will find it very useful. There is no holy grail. So don't worry about trying to find a holy grail, like, where you will get 100% success ratio. So don't worry about that. Important thing is to have anything beyond 35-40% success ratio, and that you need to have a fantastic risk reward ratio. If you have, that is the holy grail, I say. Usually the holy grail is to have a 35-40% success ratio, and a risk reward ratio should be beyond 1:5, beyond 1:4. If you can do that, anything beyond that, that is fantastic. I'm telling you, it's a simple mathematics. You will be like, stress free. You will be making money continuously, and there will be no chances that you can lose money in the markets, right? So give yourself enough chances. So 35-40% is like you are giving yourself like, 4 chances to go right out of 10. So that is easy possibility, right? And risk reward ratio, because of the system I'm giving you, the risk reward ratio will improve considerably, right? Instead of going for few bucks or a little bit 0.25% or 1% kind of trades, go for 5, 10, 20% kind of trades, right? So, and go for risk reward ratios which is much more like healthy. So do that. There are only probabilities in market. There are no 100% possibility. So remember that we are working with probabilities, and always practice before practicals. So don't go into market straight away and start doing it straight away. First practice whatever has been given to you. Do a little paper trading, and then start with a little nominal money. And then once you become confident, conviction builds up, you start scaling up your positions, right? So that's what I would say. So you should do. This is something I have, create. This is my quote. I usually say this in most of my tweets, also on Twitter. So if you know me, if you follow me, I have almost like 37,000 followers at the moment. So most of the people know me by this quote: no capital, no capital market. So make sure that you conserve your capital. The whole system, and right now the total global markets are in such a huge up moves that everybody is afraid that someday it will start cracking. So very important to conserve your capital. So I have given you 2 fantastic tools. One is standard error channel, which will hold you good in as an investor also, and the false move, how to catch them, and how to reverse as soon as possible. Yes, guys, and thank you so much. I hope you all enjoyed, and you can give your feedback to us on through maybe my website, or you can connect directly on Twitter also.
Hey, NS, that was a pretty insightful presentation and demonstration. I'm sure the summit participants now have a better understanding of how you actually go about implement the trading setups that you look at using trend lines and moving average, as well as some of the exit strategies as well. Now, to help the participants clarify some of those points that you brought out earlier on, shall we head into the Q&A segment right now?
Yeah. I'm looking forward to hearing questions from you, Philip.
Yeah, fantastic. So at the earlier stage of your presentation, you actually mentioned about, you actually showcased about using both the moving average as well as a trend line combination to look at exiting a position. All right. So when you say using them as a combination, so can I just clarify with you? Do you mean that when, let's say, the price break down at the MA and the trend line together, then you actually exit a trade? Or do you actually mean that when the price break down the MA, you exit a portion of it, and then when it breaks down the trend line again, you exit the other portion? So what is generally your suggestion on that? To use them as a combination, or to actually break up the portion of exit into the breakdown of these 2 different?
Okay. I gave them as 3 probabilities actually, Philip. The one is when the moving average breaks down, right? So people tend to exit the trade because they follow that system. Many people follow one particular system, and that is moving averages only. Then sometimes moving averages throw you off early out of the system, right? Then there are some times where the trend line, if you put a trend line below the the moving averages, you would see that the stock has not broken below, like we saw in an example, right? So, and the third one that I shown was 25% from the peak price. See, I'll tell you one simple thing. What happens? Most of the people want to catch the bottom and sell at the top. It is not possible. It is like humanly impossible, right? It's something for gods. We can't do as humans. So very important to understand, you need to say, when you take milk, okay, you boil it. You get cream below, you get cream on top. So that is not yours. You have the milk, which is the larger part is yours. So if you find a system, if you follow a system, let's say 25%. So you buy a stock which crosses 25% from the bottom, you are into a trend, right? So that's how you go. Or you sell a stock when it breaks 25%. So there are three ways which many people use, right? So I showed one way, which was moving average, then combine it with the trend line. So you are protected sometimes that the trend still is intact and you are not out of it, right? Because sometimes what happens, the stocks go into consolidation and the price goes below moving average. So we don't want to get into that trap. We'll be thrown out of the trade. And we'll be like, if you had been holding a multi-bagger stock, that multi-bagger will go away from your hand because of moving averages. So you need to combine few things. So one is moving average, then the trend line, and third one is if you are bought at very good levels, very low levels. Now you don't want to leave it. So keep a stop loss at 25%. Maybe it will not hit so easily. Because see, understand the markets have this, every market and every stock needs a, you can say, market maker, right? Market maker makes sure that that smart money makes sure that the weaker player, the dumb players, are thrown out of the system before they take the stock upwards, right? They don't want you to get into the trade and stay in the trade for them, because you are a weight for them. You are like a stone for them they are carrying. So they don't want you to be along with them. So that's how they throw you out of the trade. And that's where, if you apply these three, probably you'll protect yourself very well.
I see. All right. So in your in the many examples that you showed earlier on, all the charts actually follow the trend lines or the moving average very nicely. So, but in reality, there are like hundreds of stocks out there, and some of the stocks really doesn't follow the moving average or doesn't show very clear trend lines or trend channels easily.
Yes, you can say so.
So therefore, before we actually even apply this moving average or trend channel, trend lines, how do you go about filtering down the hundreds of stocks into those stocks that are good to apply this strategy on?
So I'll tell you basically what happens. The illiquid counters have more problem, where there is not much trading, not much floating stock available. There the issue of volatility is very high. Okay, the spreads between bids and asks are very high. So trades could go awry, you could have fake trades also on the either side and freak trades also. So that could throw you off. But to overcome that problem, when you are looking at, means a stock and when it is in such a illiquid counter, mostly liquid counters will follow the system. They will never have a issue, right? Your trend lines will work beautifully, your moving averages will work beautifully. But if you have an issue with such kind of stocks, what you need to do is you need to shift to a higher time frame. When you shift to a higher time frame, that the total, the volatility, the noise will go away. It will become very rational. You will be able to see exactly what is happening. And you use multiple moving averages like I use basically. So what happens when you use multiple moving averages, the stock will find one moving average which will work beautifully on a different time frame. So let's say there is too much of volatility on daily chart. So shift to weekly chart. When you shift to weekly chart, probably your 18 DEMA, 18 WEMA, it will become 18 weeks exponential moving average, will start working like a magic. The price will come there and start jumping from there. Because that is I usually call moving averages as, average price of or average cost of the market maker or the smart money. So they cannot allow the price to go below that. You understand what I'm saying? So what happens when smart money has a cost, right? They also have a cost to carry and they have a cost to trade and investment. So they will never allow the price to go below unless markets are like, we saw Corona kind of story, right? Or we saw 2008 kind of story where the markets fell across the board, or 2004 or whatever, once in a decade kind of moves that we have, where stock markets fall 50-60% on a single move, right? Maybe in 3 to 6 months or 9 months probably. So in those kind of situations, which are I usually call it as a black swan event. So those black swan events, even they don't have any protection. So, they will also suffer, we will also suffer, right? But you will be protected if you follow the system, if you follow what is the smart money's cost, and the moving averages are nothing but smart money's cost.
So can you share a little bit more about your daily workflow or your weekly workflow? What are the different steps you go about in your daily or weekly workflow to actually implement all those strategies that you mentioned earlier on in your presentation? Let's say, for example, on a daily basis, you wake up, or maybe like after market close, you go and open up the charts. What is generally the workflow that you go through to actually arrive to go through these different strategies and arrive at a decision that you actually execute a trade and exit a trade?
Right. Okay. So I'll tell you what I usually do is like I look at a chart, even intraday, if I'm just opening, like, see, it's not necessary that I open a chart based on like, end of day. But if I look at end of day, I have already given two strategies which are already in place. So those would be known, and I would be having a note in front of me. I want to just track the prices, note the price, keep a stop loss, and let the trade happen, right? Then I don't have to look at even the screen also. If it's a positional one, I don't have to worry. If it's something that is intraday, then I use the second strategy, the one that where false breakout one, right? I wait for the stock to give a false move somewhere on a moving average or a trend line or a pattern or somewhere. If it gives a false breakout but no follow-up, once that happens, I will wait for the stock to break down below the candle that has given the breakout. Or in the case of bullishness, I want it to go beyond the high of the candle which has given the breakdown. Moment that happens, I take a trade long or short depending on where it is happening or what is happening. And then again, my stop loss is defined because that low is already in place, so I don't have to worry. Then I let it play, because usually what happens, you would see whenever there is a false move, the smart money will make sure that you are trapped big time, and you get a big move. Usually the direction is always right then. So that is how you can, take advantage. And that's what I do usually. So I don't have a very particular system, like, I don't wait for the, open at open of the market. I don't wait. Whenever I want to see, I mostly trade Nifty when I want to do this. And when I look at this kind of setups, I usually take option trades. I go directionally long. I take naked option long and I do it.
I see. So does that mean that you actually, depending on whenever you look at the market, you could be like switching between day trading to swing trading to position trading, depending on whatever that you see is happening on the charts?
Mostly it is positional, because this trades also almost give you a positional, opportunity, because you have caught the trend. You have caught the wrong side of the majority of the traders. You are now with the smart money. Smart money has tapped most of the people. Now they will run as fast as possible against the, dumb money. So when that happens, you get, fantastic returns, and you wait for the price to keep on running, and it keeps on running because we have seen so many trades. And intraday, you like sometimes I enter, maybe you get you enter today, you exit after 3 days probably. And options usually double up for at least give 50-60% returns. Your risk is very nominal most of the time. So means you are taking nominal risk but fantastic rewards every time. I have seen it double every time, most of the time. So that is when it doubles, I take majority of my profit home. I let a small position carry it, so I get alpha on my small position.
I see. Okay, so NS, I have one last question for you, because the session is becoming a bit too long. So what would be, let's say, 2 or 3 of the most difficult aspect of implementing the strategy that you actually shared in this presentation? And any suggestions on how a trader can use the strategies that you advocate with more confidence in it? So can you share with us a little bit more about that aspect of it?
Okay, so basically what happens is you don't get this every day. Okay, you have to wait for the setup to happen. Whenever there is a false move, only you will get a trade. So you have to wait. You get it, you don't get it, as simple as that. That is the most difficult thing, is the being patient. You have to wait for the trade to happen rather than shoot everywhere wherever you find and get into a running trade and all that. I don't do that. I have a algo system running for me for doing all those kind of things. So I don't do all those. Last time I think we spoke about my algo trading system also. So this time we are very shortly launching our platform also, which is called Coder. QOD right? So I've also mentioned in my this thing, introduction. So we are very soon launching that website also. So I do that. So for me, I believe like, when I get a trade or when I'm in mood to take a trade, then I watch out for, specifically Nifty. I don't look at the bank Nifty also, because bank Nifty is mostly very volatile. And I don't like volatility. I like, peaceful trades. So I go with very simple setups, and there is nothing much seriously painful over there. There is no disadvantage. Problem is the patience. Sometimes you get a trade maybe twice a day, and sometimes you don't get a trade for 3 days also. So you have to be patient and you have to wait for it, because you want good money. You don't want you don't want to tire out yourself every day working hard and all that. Rather work smart.
I see. All right, NS, this has been a really interesting session for me, and I'm sure the summit participants benefited from your sharing as well. So thanks again so much for your participation in this summit.
Welcome, Philip, and thank you so much for giving me opportunity again. Let's hope we meet again, right, very soon with your new event.
Definitely. Now, for those of you watching this summit video right now, if you would like to keep in touch with NS on his personal website, remember to click on the web link provided below this summit video to learn more. And finally, if you would like to review NS summit video beyond this summit, or to watch more of NS recordings from our previous summits, you can also check out our TraderWave TV service, which is in short what I like to call it the Netflix for trading education. With that, we have come to the end of this presentation and demonstration. I'm your summit host, Philip Teo, and I hope you will continue to learn and apply the teachings from the many wonderful speakers on board this virtual summit. Take care, and we talk soon.